Welcome to the WTR Small Cap Spotlight podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's podcast episode, I'm being joined by Brian Lehners, CEO of Homerun Resources, OTC ticker symbol HMRFF. Homerun Resources is building the silica-powered backbone for energy transition across four focus verticals: silica, solar, energy storage, and energy solutions. Anchored by a unique high-purity, low-iron silica resource in Brazil, Homerun transforms raw silica into essential products and technologies that accelerate clean power adoption. Also joining is my WTR equity research colleague, Dimitri Silverstein. Good morning, gentlemen, and thank you for joining me today.
Morning, Tim. Thanks for the invitation. Look forward to the conversation.
Good morning, Tim. Great to be here again.
Brian, to kick things off, can you give our audience a 30,000-foot overview of Homerun Resources, its main project, and your strategic goals in developing what sounds like a unique HPQ silica resource in Brazil?
Yeah, sure. I mean, the model's quite simple if you understand the material space. We're a vertically integrated company. The essence of that core competitive advantage is a rather unique silica sand asset that sits in the district of Belmonte in the state of Bahia in Brazil. What makes that material so unique is that it's incredibly low on metal content in its natural form. So when you wash it, sort it, run it through attrition, it literally feeds straight into a solar glass furnace, which is obviously a big use case relative to what's going on around the world in solar. The second vertical becomes natural off the first vertical, which is, hey, if we process this silica, can we get it into some really high-end markets in the industrial space, in the technology space, and in the energy space? And then because we're in solar, we obviously have an affinity towards energy storage. We've built out that vertical, obviously, again, based on the silica advantage that we have with the resource. And then the final vertical is energy solutions, which creates that customer relationship / pull through that's required in the industry so that we can start building brand, etc., relative to pulling products as we create them from this silica asset and the other solutions that we put together, and distribute and market and sell those into the global marketplace.
Excellent. That's a great overview and a really cool business model. Before I turn it over to Dimitri to ask a few questions, can you provide our audience with a quick flyby of your professional background?
Yeah, my background from an educational perspective, I have a law degree and a business degree from the University of British Columbia in Canada. And I've been a serial entrepreneur for about 30 years, most of my business life, but particularly focused on materials and technology. So in this energy transition / electrification that's going on globally, that's really, if you look at it in its essence, that's the merger of materials and technology coming together to provide the solutions that we need to move forward. So we have a lot of experience in this space, both on the material side and on the technology that advances those materials.
Okay, that's really helpful. With that, I'll turn it over to Dimitri to ask a few questions.
Great, Tim. Thank you. Brian, let's dive a little bit deeper into you provided a great overview, but I just want to maybe follow up and get a little bit more detail on some of these items you mentioned. Homerun Resources has delivered, or deliberately, I should say, positioned itself as a vertically integrated materials and energy company, as you said, rather than a single asset developer, which most people we deal with tend to limit themselves to. From an investor perspective, where do you believe the greatest value creation occurs in this model? In other words, how does vertical integration reduce the risk compared with a more traditional approach to resource development?
If you follow the material through the vertical, you also follow a margin expansion relative to the increase in price. Obviously, as you process this material, you get an increase in the cost of goods sold, but the increase in price is almost exponential. It's really important that you understand the silica market. The silica market is a pyramid market. where most of the money is made at the top of the pyramid. Silica is the second most used commodity annually on the planet next to water. But a significant portion of that is that 10, 20, 30, 40, $50 silica that we have no interest in, and nor is our silica suitable for your child's sandbox. But in the higher end of that pyramid, we're lucky because our entry point is relatively cheap from a CapEx perspective. So to take that margin or that sales price from $50 up to, say, $500 is relatively cheap for us. And the first step in that, obviously, is to take the product into what it's most naturally fit for, which is solar glass. Solar glass needs really low metal content, and i.e. iron ore. The acceptable iron ore content in solar glass is like 100 to 120 ppm. We're sub 10 after washing, sorting, and using attrition to take off the external impurities on the silica sand. And that's third-party approved by engineering firms, world-class engineering firms that have confirmed that. So then you go to the next step, which is to process it even further using heat and chemicals. And we do that. Then we start entering the 99.99, the HPQ, high purity quartz market. And when you get up there, you're talking 500 to several $1,000s. If you can achieve where Sibelco is, which is 99.998, then you're looking at $10,000. So we're really close. We get to 99.9923 right now, and we'll work to get to that level. But our real focus is in larger markets. At the top, the market's relatively small from a tonnage basis, and we have under our control, we have 200 million tons of this product. So we're looking more for the really high end, not having to purify it too much, but raising that revenue, that sale amount per ton, and not increasing the cost of goods sold very much, hence creating a high margin business. So again, just chasing that silica up through that vertical as it becomes more and more pure.
That's a great overview, and as I said, and echoing Tim's comment, a really good business model as you try to capture all the value you can out of this resource. You mentioned this, but I just want to go back to that. There was some independent work that was done recently by Darfner Anzaplan and Minerale Industriali, which confirms that your silica does meet the premium specifications, and it does so using non-hydrofluoric acid processing route, which I think is very important from the environmental perspective. How should investors think about what this validation means for the project risk, the permitting process, and confidence in the long-term operating costs of running your asset?
It's really twofold. Actually, it's threefold. One is hydrofluoric acid is a terrible substance. So let's just put that out there first thing. It's terrible from the perspective of how you have to handle it and what you have to do with it, and the dangers and health risks involved in that process. Is it used in industrial process? Yes, it is. So if we wanted to use hydrofluoric acid, we are not barred from using it. What we wanted to do was look at other methods that were less extreme, less hazardous, less of a health risk, and less of an environmental risk. And obviously, if you're going down that path, your permitting process is going to be alleviated because you're not trying to drive the worst substance through that permitting process. You're trying to drive through a process that is far less complicated and far less dangerous and far less of an environmental concern. So the other aspect is that we wanted to look at operating costs and costs of doing business that would maximize our margins, and all of the required safety regulations and safety concerns and CapEx that we would have to spend on handling hydrofluoric acid. If we don't have to do that, then we save on CapEx, we save on OpEx. So from that perspective, it has economic benefit, and it has environmental benefit, and it has safety benefits. So by taking that pathway, we've removed all three of those risks from the business model.
And if I recall, you published a press release recently where you talked about several routes that you've explored in terms of process technology to get to your 99.999 type of quality on glass, and everything that you've examined seems to get you there using your resource. So you really don't need to use hydrofluoric acid is the bottom line.
100% correct. Yes.
Okay. Your silica has been qualified for multiple high-value end markets. We mentioned some of them, including solar glass, optical glass, and silicon carbide. How would you prioritize these markets to pursue first? Which ones are you going to start with while maintaining your capital discipline, avoid dilution, make sure that management focus is there? How do you prioritize these markets internally in your mind?
It's a three-sided matrix. One is obviously size of the market, the other is price, and the other is CapEx. So from that perspective, we're looking at all three of those aspects relative to each of the end-use categories that we can facilitate by processing our silica. And there are some that come under those categories. They're not well known. There are some industrial applications on the high end, like steel and motors that require silica content to go into the steel in order to make it operate better in a magnetic environment. That's a really large market. Until I got involved in Homerun, I had no idea that market had existed. But everyone gets excited about rare earths relative to building motors. This steel actually is a way bigger market than the rare earths in those motors. And it's dominated by, really the developed nations of the world, inclusive of China. So those kind of markets, I'm just using that as an example, big market, relatively low CapEx to get into the processing of that product. So build out the process plant, have a big market, and the price point expectation on that creates a pretty good margin relative to what we expect the cost of goods sold to be. So that's really how we look at the market. And then what we go, okay, let's look at low-hanging fruit. Which one can we attack first? And that ultimately comes down to what customer has come to us and said, hey, can you solve our problem as well? So most of the people that we're dealing with are unsolicited. We have done no external outward marketing at this point. It's all come in through relationships and literally cold calls through our website and various access points to the company. So we're quite excited about that because I've been in business for a long time. When people want to buy your product before it's ready, they're in the right space.
Dimitri, the former analyst in me can't help myself, having covered specialty chemicals. That's a really cool story, Brian. I mean, my initial thought is you're really selling a solution. You're helping someone with a problem, and that's always being in the driver's seat when it comes to margins. So that's great.
100%, 100%. And to put that into context, we were approached by a large Japanese conglomerate with an actual problem. And they're in one of these industrial spaces, and they have a real issue with inconsistent supply. And so they have their own offtake, and they're not getting the offtake that they need to produce their own offtake. And you guys know what that means, right? So from that perspective, they're looking for a large resource that can achieve what they need from a specifications perspective. And then they can start being comfortable in their business model in relying on that supply, the content of that supply, being accessible for a long period of time.
Excellent. Back to you, Dimitri.
Great, Brian. Thank you. You went through sort of the laddered structure of the business and how you hope to maximize the value for your resource. The planned solar glass facility sounds like a cornerstone asset that you're considering. With the letters of intent already in place and strong policy support from Brazil, what are the key economic drivers that the investors should focus on, such as input costs, price variability, capacity utilizations? As this project advances towards financing and construction, what should investors be paying attention to?
Yeah, I think from an investment perspective, you need to do that top-down analysis, which is, where does solar and battery sit in the energy transition? The answer is they're dominant. If you look at Elon Musk, he figures 90% of the world's energy is going to be generated from solar at some point in the future. I'm not going to bet against him. Not sure if it'll be 90%. There's some other adequate ways of generating energy, but solar and battery has become a cost-effective And what I mean by that is not only is it relatively cheap to build that facility, but you can do it in an extremely timely manner. Like building a nuclear power plant is like building a mine. It takes a long period of time. And building some of these other energy generation technologies takes a period of time. So from a macro perspective, we're really in the right place at the right time. When you look at that, then you go down to the micro analysis, which is the input costs. We're lucky to be in Brazil. I mean, Brazil not only has this amazing resource that we've taken control of, but it also has incredible human resources. And those human resources are as good as what you'll see in any other country in the world from a work perspective and from an educational perspective, knowledge perspective, intellect perspective, PhD perspective, if you want to go to the R&D side. And so from that perspective, we get access to that resource, but we get access to that resource as a significant discount to what you would be familiar with paying in Canada, in Western Europe, in Australia, in the United States, et cetera. So we get that resource at a cost-effective, and we pay higher than any of the competition. So just so you're clear on that. Our engineering team have done an incredible job mapping out all of the input costs. That's utilities across the board, and all of the material inputs that go into solar glass. Through that process, we recognized that the incredibly low iron content would reduce, if not neuter, one of the inputs, which was antimony. Antimony's become a huge issue in the solar glass space. There are a variety of business models that talk about recycling solar panels. Literally everything in a solar panel can be recycled and repurposed back. The one that can't is the glass. And it's not only that, but nobody who's making bottles and nobody who's making glass windows wants that glass either as a cullet product into their production because of that antimony content. So antimony is a nasty product. It's in solar glass. China dominates solar glass. They produce 90 to 95%. And antimony is a big cost component of solar glass because of that. We don't need antimony. We're antimony free. So that drops the economics, the cost of goods sold even more. The other big benefit that we have is we get the ability to build the solar glass plant right next to the resource. So we have no logistics. So this company, because they will be separate legal entities, this company will extract and transport silica to this company at a fixed price. We built a nice profit margin into the silica business, and we have signed offtakes in Brazil for $700 to $800, so average $750 against a COGS that will be $400 or less, and in early dialogue with organizations in the United States and Europe, that margin will be even higher, inclusive of the logistics costs of moving the product to those markets. So we're in a really nice position, again, with a macro umbrella that looks exceptional relative to solar. And one of the things that's really kept its price point, really kept its value through this entirety of solar getting super cheap to the point where fourth quarter last year, it was the cheapest it's ever been on a kilowatt hour. The glass price has been consistent. And the reason behind that, you guys know this, is glass is the material where the biggest cost is logistics. So from that perspective, making glass is one thing, but moving that glass is another thing. So glass maintains its price because of those big logistics costs to get it from the factory to the end user. So we're in a really good position in Brazil, but I think our vision was to be in a really good position around the Atlantic Ocean region as far as the solar glass supplier. And I think the biggest problem we may have is that we won't have enough throughput by the time the facility goes into production.
That's a high-class problem to deal with when the time comes. The next sort of rung on your ladder of value that you've described is the long-duration energy storage system. I think you're calling it Enduring, which integrates silica processing, thermal storage, and an AI-based energy management system. From a commercialization standpoint, what early use cases or customer segments do you believe will generate the first meaningful revenue off of this project and initiative?
That's a relatively early stage technology, but within the context of a technology sector that's getting quite advanced and is rapidly commercializing. So there are competitive products in the thermal energy storage business that are being commercialized. Where thermal energy storage works really well is in environments where the end use is both heat and electricity. That gets you an optimal efficiency relative to power in, energy out. And so, when you're in a situation where you're working next to an industrial entity that needs both industrial heat and power, then that's the most optimized system. What we're looking at as a first iteration of product is a more modularized system. You may have seen the visuals of the big silos, the 10 to 100 megawatt utility scale energy storage systems. I think the marketplace will start a little smaller than that, and we're seeing that in the competitive products where you've got a module that's, say, categorized at 1 megawatt over 10 hours, which already right there you beat the lithium ion business because they can't sell a 1 megawatt over 10 hours unless it's just a ginormous system in order to keep the energy flowing over that period of time. So it has its advantages. The cost of goods in the product is really low because it's silica that's storing that energy, not chemistry. The silica has a long life cycle. It doesn't break down over time, low maintenance cycle, low capex, and extremely well fit towards, again, use cases that are looking for heat and energy. One of the forefront use cases, I think, right now, based on some of the work that we're doing in the commercialization, is in the data center space relative to their needs. If you understand data centers, it's both a power and a cooling issue. Data centers need a lot of cooling, they generate a lot of heat, and they use a lot of power. So if you take those three things, you've just basically described the enduring system. Anyone in material science knows that you can turn heat into cold and cold into heat if you got the transfer. So from that perspective, I think we present a really good solution. What I've tried to do is take it from the science concept, which is we can do everything. We will build all the widgets on the machine and drill it right down to what really the core competency of that LDES system is, the enduring system, which is a energy storage mechanism. And then look at third-party products that can provide the solutions that are required with that stored energy. So we've got dialogue now with some entities that are advanced and commercialized in those other products that are providing those solutions, but they need the energy, they need the heat. So that's a little bit probably more detail than I should have given, but that's basically the business model related to the enduring energy storage system.
No, it was a great overview, Brian. I mean, this is a newer technology, so I think people need to understand why you're pursuing it and what the payoff on the other end is. So I think the detail was great. With the integration of your AI energy management system across storage, photovoltaic batteries and industrial applications, how should investors think about software and service contributing to margins and recurring revenues over time for Homerun Resources?
Well, you guys hit on it earlier. We're a solutions company, so we're looking at for end users that want energy solutions. That is really what we're doing. And when you look at that in the modern world, again, I'll go back to its materials plus technology. So the technology is the wrapper. It pulls all of these things together and gives you that, user interface that you require. I have a lot of experience and I've brought some of those team members along with me over the years in developing automation and IoT systems. We started doing that, 2005, 2006, 2007, have built 2 or 3 companies around that concept. And so what we did was we went, hey, let's look at the way energy is being built now. And the way it's being built is it's a whole pile of different devices being brought together. And you're really tying a newly built system onto the old grid. And these newly built systems, it's not one vendor. It's, the batteries are from here and the panels are from here and the inverters might be from several companies. And then the devices that are using that energy system are disparate as far as vendors go and use case goes and specs go. So you need some intelligence in that environment. This isn't just turn the switch on, turn the switch off. This is like managing the entirety of an energy system across multiple end uses. So that's where our IoT skill set comes in. So we built our energy system is designed to provide the controls over that, but also we built an IoT layer, an Internet of Things layer over top of that that does the next step. Then we combine that with machine learning inside the hub. So you've got one of the world's first AI at the edge hubs, but with a real functionality involved, i.e., it's designed to manage these systems. Now, if you're a player and you've got one system, that's enough complication right there. But now think about an entity that's got 20 data centers and they've all got disparate pieces and parts relative to how these energy systems are working and how that energy is being deployed within that facility, lighting, data processing, cooling, etc. So you've got HVAC layers and all that stuff. We're really good at that because we understand how the IoT works. So we can integrate all of that functionality, those layers of Internet of Things management systems, and tie that back in. So the energy system is integrated beautifully with what they're trying to do in their 100% business versus the energy side, which we can look after, but they need to be integrated to function efficiently.
Understood. Thank you for that, Brian. You recently engaged, is it Jerry Skopek or Yuri Skopek?
Yuri.
Erie, yeah, that's what I thought. You've recently hired Yuri Skopek to help guide the commercialization of this enduring system and energy platform that we just described. What gap was this hire intended to address, and how does his experience help accelerate revenue rather than just technology development advancements?
That's a great question. I've built several companies in my life, and anytime you can bring in somebody that has decades of experience, not only in what you're trying to sell, but also has the relationships from those decades of experience with end and potential end users. So what Yuri brings to the table is a deep knowledge and understanding of these energy systems. He's published writing pieces. In particular, he has, and I agree 100% with him with the concept that DC is the new energy system and AC is for transport, right? So the energy nerds will know exactly what I'm talking about. Simply put, is all of the devices that are drawing down on that now, and a lot of the generation like wind, solar, is generating DC and using DC, but we're still using AC in the middle. So it's these transitions back and forth, converting that energy, AC, DC, DC, AC. Those inversions, those inverters, those are really reducing efficiency. And so Yuri's belief is that these are going to be DC only. They're going to be self-contained energy systems. If you look at what we're building, that's exactly what he wants and what he believes in. So bringing his years of experience in building those and his relationships within the energy industry, it just fast tracks our ability to get into dialogue and hear people's problems and look at how we can provide solutions with our tool set.
So another thing that Tesla was right about all those decades ago, DC probably would have been the way to go back in the day, rather than Thomas Edison's AC path.
Very good. You just gave yourself the nerd stamp there, Dimitri.
Uh,
No, proud. I'm proud of that. That's cool.
Before we end this conversation, thank you for that. I do take that in the spirit that you're offering. As investors evaluate your progress over the next 12 to 18 months and pay attention to what Homerun Resources is doing, what are the most important milestones, whether technical, financial, commercial, that you believe will demonstrate execution and support, and eventually lead to a re-rating of the company when it comes to valuation?
It's vertically integrated company, but there's a driving linear within that. So the answers to those three areas: technical, it would be building and commissioning the solar glass plant. That's a huge transition. That's a huge enterprise. That's a unicorn within itself relative to valuation. Financing that project is obviously really important. We're working with several entities to put that financing together. We have a relationship with the Brazilian government through their development fund, which is BNDES, So we're very advanced in getting them involved in that financing. It'll be done as a special purpose vehicle, so we reduce the dilution for the Homerun holding company, the public company. So my job is to minimize the new equity in the SPV and maximize our equity in the SPV in that process. And hopefully, if people see what we're embarking on and what we think we can achieve, hopefully they're pretty impressed with how we execute on that. And then from a commercial perspective, it's just integrating all the revenue streams that come from extracting the silica and selling it to the solar glass operations, producing high margin solar glass. That silica business right next to that solar glass business, that's a two-headed unicorn from a valuation perspective. Add in, thermal energy storage down the road. There's another potential unicorn right there. Some of the peers are trading at unicorn valuations already from a market cap perspective. And then the solution side ties all that together, but that in itself, if we go mainstream with our EMS platform, then that in itself could be another unicorn. So I think it's a tremendous opportunity to get into a vertically integrated company where all the pieces are in place. We're just executing on the strategy relative to driving to revenue.
Understood. Thank you, Brian, for that.
Well, Brian and Dimitri, thank you for the conversation today. It was both educational and fun, which is kind of a unique combo, which I enjoyed. And you, as we're winding down the year, I'd be remiss if I didn't say thank you for mentioning AC/DC, because you took me back to one of my favorite memories of 2025 when I took my wife and kids to see AC/DC in Soldier Field on Memorial Weekend. So thanks again, gents, and have a great end of the year.
Yeah, happy holidays to everybody, and thanks for the opportunity.
Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.